Altcoins are loading up for their next explosive pump. Today, I'm gonna show you my top picks in crypto's newest sector. But guys, you will need to act fast. A new wave of altcoins is lining up to dominate the cycle, and the battle is already underway. Billions in daily trading volume are pouring into these platforms, and the fight for market share is becoming the fiercest showdown of the cycle. While most people are watching Bitcoin's pullbacks, the real action is happening here in the altcoin arena where the next giants are being built. Markets move in cycles, guys, you know that. And the headlines always fixate on the chaos, the red candles, the panic, the liquidations. That's what dominates the screen. But every cycle also has a hidden chapter. And right now, in the rise of new platforms, record-breaking liquidity, and infrastructure that will carry crypto into its next explosive phase. So guys, in today's show, we're gonna break it all down. We'll start exploring the top altcoins from the top narrative right now. Then we'll zoom out to $1 trillion volumes in DeFi, the stablecoin supercycle, Wall Street infrastructure, global wealth shifts, and the US policy moves that could place crypto straight into the heart of the financial system. And guys, we do this because even though despite the Bitcoin price is down, basically, it doesn't matter. The macro setup is super bullish. That's why I make these videos, guys, for you daily. And if you appreciate that, you know how to help the channel. It's free, it's easy to do. Destroy that like button. If you're new to the channel, what's up? My name's Chasse. Welcome to the channel. Do yourself a favor, hit that subscribe button, that bell notification, and let's get into it. So guys, stick around because once you see the bigger picture, you'll understand why this disbelief right now is one of the strongest buy signals in the entire cycle. So let's start with what we talked about yesterday. We talked about perp DEXs, and today I want to expand on this topic a little bit more because we barely touched on it yesterday. And this narrative, it's absolutely massive and has huge potential. Daily perp volumes are up 150% in just the past 3 days. This could be one of the defining battlegrounds of the entire cycle. The clear leader right now is Hyperliquid. In the last 30 days, it generated around $90 million in fees, more than every competitor combined. It has a $13 billion market cap and around a $45 billion fully diluted valuation. The product works smoothly and traders love it. But here's where things are getting interesting. Starting November 29th, about 238 million team tokens start to vest over 24 months. And at today's prices, guys, that's almost $12 billion of value being unlocked. That's about $500 million a month worth of tokens. Even with strong token buybacks on Hyperliquid, that's still heavy overhang. Hyperliquid is also preparing a native stablecoin called USDH, which could strengthen its moat. But the unlock is still looming risk. Then we've got Aster. Yesterday, we broke it down as a Binance-backed challenge with hidden orders, billions in daily volume, and CZ from Binance. And Binance, their fingerprints, guys, they're all over it. For those of you guys who missed the video, here's a quick recap of Aster's biggest highlights, plus some fresh details you're going to want to hear. Aster's hidden order features mean traders can place positions without exposing themselves in the public order book, which shields strategies and reduces MEV risks. It's backed by YZI Labs, which is previously Binance Labs, got exposure from ZZ himself, and has ripped to a $3.3 billion market cap at launch before cooling to $2.8 billion, but now sitting at an $18 billion fully diluted valuation. And we've got some traders, some bull posters who are already calling it the Binance of DeFi, and that is for a good reason. That comparison makes sense considering it just flipped Circle in 24-hour revenue, ranking second only to Tether among all crypto projects. And we'll talk about Tether a little bit later in the show as well. That's a staggering leap for a brand new protocol, showing just how quickly money is flowing into its ecosystem. On top of that, Aster just locked in a major integration with Trust Wallet. This makes sense, it's the Binance ecosystem. Perps are coming directly into the app with 100 plus markets and up to 100x leverage. All of that powered by Aster. That plugs Aster's trading engine into one of the most widely used crypto wallets in the space. A move that could funnel millions of retail users straight into its platform. Even CZ himself weighed in on the partnership, hinting at how strategic this tie-up could become. And just as Aster is gaining traction, the CEO dropped a bombshell today, confirming that Aster Chain is already being tested and preparing for launch. If Aster succeeds, it's going after the full stack of liquidity, fees, and applications That's exactly what Binance and Hyperliquid did as well. They started with a killer exchange product, then spun it into an entire chain where fees, users, and projects stay in-house. That's why this news hits different. Aster is fighting for perp dominance right now, while setting itself up to capture the entire DeFi stack as it grows. Aster and Hype are locked in a head-to-head battle for perp DEX dominance. Hype has been holding its ground as Aster starts making its move for the crown. It's still early for Aster, but the initial traction has been phenomenal. And guys, let me know in the comments below if you got in when the video released yesterday. It was $2 when I made the video. I know the video released yesterday, it was about $185. And now at the time of recording, it's about $2.35. So if you got in when the video, congratulations, well done. It's up quite a bit today, about 20% from the time of that video releasing yesterday. And so there was a report also that came out from Blockmates, and they broke it down with fresh numbers from the past week. Hyperliquid is still the heavyweight, pushing over $76 billion in perp volume versus Aster's $25 billion. But guys, I'm telling you, the volume is growing every day on Aster. Like next week, it's gonna be a totally different story. But for now, Hyperliquid still remains in the lead, but not in the past couple days, it seems. So we'll have to see next week and revisit what's actually going on here. But here's the twist. Aster's TVL grew nearly 300% in just 7 days, hitting $1.9 billion, while Hyperliquid's TVL actually slipped down slightly, 1.8% to $6.5 billion. That kind of inflow signals users are actively moving capital into Aster, even while Hyperliquid dominates in raw size. So the matchup looks like this. Hyperliquid has scale, liquidity, dominance, and adoption and integration, has been around for a while and was a market leader up until about now. But Aster is the fast rising challenger with momentum on its side. If that growth rate continues, we could be looking at one of the fiercest rivalries of the cycle. Now let's talk about another platform, guys, Avantis. This one is different. Avantis is native to Base Chain, and it's backed by Pantera Capital and Peter Thiel's founder fund. Its big differentiator is that it offers perpetual trading, not just on crypto, but also on real world assets like gold, silver, and crude oil. That makes it instantly relatable to institutions who already trade those assets every single day. On top of that, Avantis uses USDC as collateral and doesn't charge upfront trading fees. Instead, it takes a cut of profits. For high-frequency traders and institutions who have heavy fees, this is attractive. With a market cap of around $500 million right now, Avantis is positioned to capture both the Perp DEX boom and the RWA narrative at the same time. And then we have another player as well, Orderly. Orderly isn't going after Hyperliquid head-on. Instead, it's building an infrastructure layer that other exchanges can plug into. Think of it as the prime brokerage of DeFi, a liquidity hub that others can tap. It's backed by heavyweights like Pantera and Sequoia. The model is clever. Up to 60% of net USD fees are allocated to buybacks, split between the stakers and the community. The challenge, though, guys, is scale. In the last 30 days, Orderly generated only about $500,000 in fees. That is really, really tiny compared to Hyperliquid or what you're seeing from Aster. But if it's an integrator, strategy sticks across Ethereum, Base, and BNB, it could grow quickly. So quick recap, guys. Here's the battlefield of this narrative right now that's actually taken off. Hyperliquid on top with a supply cloud overhang coming in November. Aster surging with hidden orders and CZ's backing. Avantis pushing RWAs into perps, and Orderly betting on infrastructure. This is a genuine arms race. Perp DEXs could easily become the next mega narrative of the cycle, but just like most altcoins, these tokens are high risk. They can run hard and they can unwind just as fast. So guys, manage your risk, don't go too heavy. And there's a lot more. And why this volume has exploded in 150% or 300% in the past 3 days, whatever it was because the airdrops for like one of these perp DEXs coming up called Lighter, if you're using that exchange for the past 6 months or whatever, and you've been earning these points, they're selling for crazy on the secondary market. So people are using these upcoming perp DEXs. You've got Paradex, you've got Lighter, a couple other ones that are really fighting for the same space. So over the next 6 months, we're going to see more competitors in this space, which could dilute mindshare. But for me, how I'm dealing with this right now, guys, I was too late to the Hyperliquid, so I don't have any skin in the game there. For me, I covered in the show yesterday. If you haven't seen it, go make sure you watch that show. But I gave you all the reasons why I went really heavy into Aster for now, until Aster hits close to parity on market cap with Hyperliquid. This is where I'm putting all of my eggs in right now because it has the biggest narrative, biggest mind share, the CZ, the Binance, the backing, the money. To me, that's where I think we're going to continue to see strong momentum over the next week or two. And I expect another 2 to 3x from here in the next 30 days or so. All right, let's zoom out from the DEX battles and look at the bigger picture of on-chain liquidity, because the scale here, guys, is unprecedented. For the first time ever, decentralized exchanges cleared more than, get this, $1 trillion in spot trading volume in back-to-back quarters. That is a landmark moment. It means DeFi is now competing head-to-head with centralized exchanges as a main venue for trading. And if you watch the channel a lot, you know, guys, I hardly ever use centralized exchanges. I hate them. I hate the KYC. I hate the custody. And now that we have amazing decentralized exchanges, I just can't wait to see, like I was talking to the team from Perp DEX, and they're going to have a permissionless spot listing platform, which I think is fantastic. No longer, if we can get a bunch of users on these platforms, no longer do we have to depend on these exchanges, these centralized exchanges, taking all this money and dumping the tokens and manipulating the markets. No. We're going to have awesome, populated, decentralized exchanges with spot markets that our new projects can list their tokens on and have awesome markets on great exchanges. I am so happy to see this. And guys, where you dig into where a lot of this activity is actually happening, this online, this on-chain DEX volume, it's the BNB chain, really. They're leading the charge. In Q3 alone, applications running on BNB chain generated about $357 million in fees. You got PancakeSwap, Venus, Uniswap, Solve Protocol, Aave, and others were the biggest contributors to that revenue. And now you've got Aster. On top of that, more than $200 million of stablecoin inflows poured into BNB chain in the past 24 hours just last week, dwarfing flows into Arbitrum, Mantle, and even Ethereum. That kind of magnet effect tells you where traders are choosing to deploy liquidity right now. At the same time, the altcoin market cap chart is sending a signal, guys. It broke out of a 4-year cup and handle formation, a pattern that hinted at as much as 74% upside. But price has already slipped back under the resistance level, guys. If it can reclaim that, it could trigger an altcoin season rotation. If it fails, it could end up as another fake out. Either way, this is one of those spots where a single move can flip the market's entire narrative. So when you put it together, $1 trillion DEX volumes, BNB chain dominating flows, and the altcoin market structure on the edge of a breakout, the message is simple, guys. Liquidity is flooding on chain, and the setups for the next rotation are forming. For me personally, I think that altcoin season is coming, but I think it's a little bit premature looking at this cup and handle formation. I think it's because Bitcoin had a pullback. We do see more money coming into this market pretty seriously, and things like Aster and Hype and things like that, who are pushing the altcoin market cap up compared to Bitcoin in this recession. But as Ben Cowan said, usually in October, we see Bitcoin dominance creep back up. And I think we get strong altcoin season in November. Let me know in the comments below, guys, what you think. And while that kind of liquidity is moving through DeFi, the foundation underneath it is the stablecoin layer. Guys, stablecoins are becoming more solid than ever. Tether is now in talks with investors to raise up to $20 billion at a valuation close to $500 billion. That would make it one of the most valuable private companies in the world, right up there along with SpaceX and OpenAI. Think about that for a second. A company that started by issuing a dollar-backed token could end up valued higher than most Wall Street banks. They only have like 100 employees. It's insane. The numbers backing it up are huge. Tether has $172 billion USDT in circulation, and they reported almost $5 billion in profit the second quarter of this year. Circle, the company behind USDC, just went public at a $30 billion valuation. That gives you a sense of the gap between those two companies. And Cantor Fitzgerald, which owns a 5% stake in Tether, is advising on this deal. At a $500 billion valuation, Cantor's slice alone could be worth $25 billion. That's real Wall Street money tied into this. But it's not just the giants. Governments are now launching their own stablecoins directly on public chains. Last week, we talked about Korea. This week, we're talking about Kazakhstan. They just rolled out the Tenje Pagged KZTE stablecoin on Solana with partnerships from MasterCard, Intibix, and Eurasian Bank. That's a national currency issued on DeFi and plugged into one of the fastest chains in the world. So you got now the Korean won on Avalanche. You got the Kazakhstan Teji or whatever on Solana. And so you can see the shift of what's happening. Stablecoins are no longer just quiet payment tools. They are becoming some of the most profitable businesses in crypto, and they're being picked up by governments as strategic infrastructure. That's why they are the real backbone of everything happening on chain. Stablecoins may be the backbone, but there are other ways traditional finance is wiring itself directly into crypto. And even with prices pulling back, the biggest players are still building positions and infrastructure for the next wave. You got Morgan Stanley's E-Trade platform. They're preparing to launch retail crypto trading for Bitcoin, Ethereum, and Solana in 2026. They're building it out with a company called Zero Hash, a digital asset infrastructure provider that also raised $104 million at a $1 billion valuation in a round led by Interactive Brokers, with Morgan Stanley also joining in as well. E-Trade already has more than 5 million users, which means millions of US retail investors are about to get direct access to crypto trading through a platform they already trust. Now, guys, why is this interesting to you? Well, it's not other than just to paint a huge picture of adoption still happening, because when prices are down a little bit, we need to look at how the overall market's going, which players are getting involved. This is not just crypto bros anymore doing crypto investments. This is massive, mainstream, the biggest institutions in the world building the infrastructure for the digital age of finance. And this is what's happening right now. We've also got a company called Finality that just raised $136 million in a round led by, get this, Bank of America, Citi, and Wisdom Tree, with Goldman Sachs, Santander, UBS, and Barclays also participating. Finality is building blockchain-based settlement systems tied to central bank reserves. They already launched a sterling payment system in the UK and are now preparing to expand the dollar and euro markets. Think of it as a wholesale banking infrastructure rebuilt on the blockchain. And in Europe, you've got a company called Börse Stuttgart, the region's 6th largest exchange. They've expanded into crypto trading platform into Spain. That means more retail investors across Europe can buy and sell Bitcoin and other crypto assets through a fully regulated traditional exchange. This is adoption happening globally. It's so important to understand the big picture so you don't get shaken out, right? So between Morgan Stanley onboarding retail, Finality modernizing wholesale settlement, and Börse Stuttgart expanding across borders, the picture is clear, guys. Crypto is being plugged directly into the traditional systems quickly. Now, guys, speaking about this traditional regulated system, today we've got something happening on Paid Network. As you guys know, Paid is bringing amazing deals, and they just secured something very special for us. It's called the 21X deal. Will be live soon. 21X is Europe's first fully licensed blockchain stock exchange. Think NASDAQ, but global, faster, cheaper, and on-chain. They're backed by Polygon Labs, 1inch Foundation, Solana Foundation, Tezos Foundation, State Capital, and many more. And they've got heavy hitter partners lined up: Franklin Templeton, UBS, Van Eck, Chainlink, amongst others. They have over 30 participation agreements signed and more than 50 issuers preparing to list. Integrations with Fireblocks, SAP, Circle, and others are already secured. They're raising, guys, at an $82 million valuation, and they project over $227 million in revenue by 2029. That would put them by 2029 well at like a $2-3 billion valuation, and right now being offered at 80-something million. This is one of those rare deals: regulatory approval, institutional backing, and early stage access. And guys, here's the best part. Through my link, you get 0% carry fee. That means whatever upside 21X delivers flows straight back into you. It's a real equity and a real future of capital markets starting from just $500. Guys, don't miss it. Use my link that's in the description below. You could also go do more due diligence, because I didn't tell you nearly enough, but go to the link in the description below, do your due diligence, not financial advice, and use my invite link as well to make sure that you get that 0% carry fee. Otherwise, you're subject to like 20% fees. And while Wall Street and Europe are wiring crypto into the systems, the wealth data shows how big the shift already is. A new report from Henley and Partners estimates that crypto has now created 241,700 millionaires and 36 billionaires worldwide. That's a 40% jump in crypto millionaires from last year and a 29% increase in billionaires. That's crazy. Out of those, around 60% of the millionaires and 17 billionaires are Bitcoin holders. At the same time, adoption is climbing. The report estimates there are 590 million crypto users globally, with over half holding Bitcoin. That's huge. That means almost 7.5% of the world's population now has exposure to digital assets. I remember last year, this was about 4%, almost 2x in a year. Meanwhile, gold is blowing past every record on the chart. Futures just broke out above $3,800 to set new all-time highs. Gold ETFs saw their largest inflows since January 2021, and the total value of central bank gold reserves has now overtaken the value of their US Treasury holdings. That's a historic shift in reserves. But this is what I found the most interesting. Deutsche Bank just published research saying they expect Bitcoin and gold to coexist on central bank balance sheets by 2030. The bank's analysts say Bitcoin is following the same path gold once did, moving from a riskier outsider asset into a core part of reserves. That's what I've been saying forever on this channel, that gold or Bitcoin will be a global reserve. That's absolutely massive coming from one of the world's biggest banks. So the science guides, they're everywhere. Crypto is minting a new class of wealth. Adoption keeps rising. Gold is breaking records and central banks are rebalancing their reserves. And now Bitcoin is on the table to join gold as a reserve asset within the decade and probably even sooner. Guys, yesterday we focused on how regulation could open access to things like 401k retirement accounts and the SEC pushing for an innovation exemption. Today, the story goes even deeper into the actual plumbing of global markets. And regulation keeps looking more favorable for Bitcoin and crypto. The White House Council of Advisors on Digital Assets says they expect a comprehensive market structure bill to be passed before the end of this year. It will merge several proposals already in play. We've got the Clarity Act, the Responsible Financial Innovation Act, and the Genius Act that stablecoins rules were set earlier this year. Together, it would work to finally create a unified US framework for digital assets. And guys, you know that I moved back to America to be part of what this is happening and what's going on. So you can expect, well, I won't spill the beans right now, but just to say that I'm keeping a very close eye on this and very excited for it. And you guys know, if you guys know the channel a lot, you know why I moved back to the States. And so we're working right on that, keeping an eye on that and trying to line up just as this happens before we get this exemptions and freedom to do a lot more stuff here in America. The CFTC is also making big moves. Acting Chair Caroline Pham just announced an initiative that would allow tokenized collateral, including stablecoins, to be posted on US derivatives markets. This is the market that clears a quadrillion dollars in contracts with 80% under CFTC oversight. If this goes live, it means crypto collateral would be integrated directly into the core contracts that moves the biggest financial markets in the world. Imagine this happening and all of a sudden on all these CME futures and all these things, you have crypto on there. Insane. Imagine that. And then there's the Fed. Jerome Powell recently warned that job creation has dropped sharply due to tariffs. He points out that we're in a low hire, low fire economy, that the stock market looks a bit high and heated, and said that workers will need new skills to adapt in today's world. In other words, the Fed is watching the economy carefully while policymakers build new infrastructure for digital assets. So guys, let's zoom out. We just walked through a cycle-defining setup. Perp DEXs are tuning in to the new battleground where millionaires are being minted right now. On-chain liquidity is breaking records. Stablecoin issuers are scaling to $500 billion valuations. Wall Street and Europe are wiring crypto into their systems. Global wealth reports are showing crypto minting millionaires while central banks shift reserves, and the US is moving into a place where digital assets directly become integrated into the financial system. And yet, if you open X, you still see people saying it's over every time Bitcoin drops a couple percent. I mean, Bitcoin is only down 8.5% from all-time highs right now, guys. This is nothing. That disbelief is exactly what tells me this market has so much further to run. Every cycle has a moment where the surface level noise doesn't match the foundation being built underneath. That's where we are right now. The fundamentals, they're stacking up. The foundations are being laid and the capital is lining up. When the sentiment finally catches up to reality, that's when the next phase ignites. So guys, stay sharp. Remember, stack your Satoshis, and I'll catch you guys on the next one. See ya.